Hello everyone. Welcome to this YouTube video about what to do during inflation. Inflation is a term used to describe the general increase in the price of goods and services in an economy over time. Inflation can be caused by various factors such as an increase in demand for goods and services, supply shortages, or changes in government policies. In this video, we will discuss some tips and strategies that you can use to manage your finances during inflation. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Number 10. Understand inflation. The first step in dealing with inflation is to understand what it is and how it affects your finances. Inflation reduces the purchasing power of money, which means that the same amount of money will buy fewer goods and services over time. Inflation can also affect the value of assets, such as stocks and real estate. Therefore, it is important to stay informed about the current inflation rate and its impact on the economy. Number 9. Invest in assets that appreciate in value. During inflation, the prices of goods and services increase, but so do the prices of assets that appreciate in value. Assets such as stocks, real estate, and precious metals tend to perform well during inflationary periods. Therefore, it may be a good idea to consider investing in these assets to protect your wealth from inflation. Number 8. Pay off high-interest debt. Paying off high-interest debt is a critical step in managing your finances during inflation. Inflation can cause the cost of borrowing to increase, making it more challenging to pay off debts with high interest rates. High-interest debts, such as credit card debt or personal loans, can quickly accumulate interest charges and add to your financial burden. By prioritizing paying off these debts, you can reduce your financial stress and save money on interest charges in the long run. It's essential to create a plan for paying off your debts and to allocate as much money as possible towards your highest interest debts first. Consider consolidating your debts into a low-interest loan, or seeking assistance from a credit counseling service if you're struggling to make payments. By reducing your debt load, you can improve your financial stability and prepare for the impact of inflation on your finances. Number 7. Create a budget. Creating a budget is an important part of managing your finances during inflation. Inflation can increase the cost of living, making it more difficult to manage your expenses and save for the future. By creating a budget, you can track your spending, identify areas where you can cut back, and prioritize your expenses. A budget also helps you to plan for the future by setting financial goals, such as paying off debt or saving for retirement. When creating a budget, it's important to factor in inflation and adjust your expenses accordingly to ensure that you can maintain your financial stability. Number 6. Diversify your income streams. Diversifying your income streams is an effective way to protect your finances during inflation. Inflation can reduce the purchasing power of your income, making it more difficult to cover expenses and save for the future. By having multiple sources of income, you can mitigate the impact of inflation on your finances. This could include starting a side hustle, investing in rental properties, earning passive income through investments, or freelancing. Diversifying your income streams not only provides financial stability, but also can offer new opportunities for personal and professional growth. Number 5. Keep an emergency fund. Keeping an emergency fund is an essential part of managing your finances during inflation. Inflation can increase the cost of living, making it more difficult to cover unexpected expenses such as medical bills, car repairs, or job loss. By setting aside a portion of your income into an emergency fund, you can prepare for these situations and avoid going into debt or using credit cards. Financial experts recommend having 3 to 6 months' worth of expenses saved in an emergency fund. This fund should be kept in a low-risk, easily accessible account such as a savings account or money market fund. Number 4. Consider hedging against inflation. Considering hedging against inflation is an important strategy for managing your finances during inflation. Hedging involves investing in assets that are expected to appreciate in value during inflationary periods. These assets can include commodities like gold, silver, and oil, or inflation-protected securities, such as Treasury inflation-protected securities. By investing in these assets, you can offset the effects of inflation on your portfolio and provide a more stable source of returns. However, it's important to note that hedging strategies can be complex and may involve higher risk. It's essential to consult with a financial advisor before making any investment decisions. Number 3. Stay informed and adaptable. Staying informed and adaptable is crucial for managing your finances during inflationary periods. Inflation rates can change rapidly, and economic conditions can be unpredictable. Therefore, it's important to keep up with current events, economic indicators, and financial news to make informed decisions about your finances. Additionally, it may be necessary to adjust your investment strategy, budget, or income streams to adapt to changing economic conditions. Being flexible and willing to adjust your financial plan can help you stay ahead of the curve and maintain your financial stability even during times of inflation. Number 2. Negotiate with lenders and service providers. Negotiating with lenders and service providers is an effective way to reduce your financial burden during periods of inflation. When inflation occurs, the cost of borrowing and using services can increase, but you may still be able to negotiate better rates or deals. For example, you could try negotiating a lower interest rate on your mortgage, refinancing your loans at a lower rate, or requesting better terms from your service providers. Negotiating can save you money, reduce your financial stress, and make it easier to manage your budget. To negotiate effectively, you should do your research beforehand and know what options are available to you. Be prepared to make a strong case for why you should receive better rates or terms. You could provide evidence of your good credit history or your long-standing loyalty to the service provider. Number 1. Be mindful of your spending habits. Lastly, it is important to be mindful of your spending habits during inflationary periods. As the cost of goods and services increases, it may be tempting to overspend or indulge in unnecessary purchases. However, this can quickly deplete your finances and leave you vulnerable to financial hardship. Instead, focus on prioritizing essential expenses and limiting discretionary spending. By being mindful of your spending habits, you can maintain your financial stability and weather the effects of inflation. In conclusion, inflation can have a significant impact on your finances, but there are steps you can take to protect yourself. By investing in assets that appreciate in value, paying off high-interest debt, creating a budget, and keeping an emergency fund, you can manage your finances during inflation and achieve your long-term financial goals. Don't forget to like and subscribe to our channel for more content like this. Thanks for watching.